Hey guys, in this video, I'm going to go over what crypto I invested into and what I learned from that entire experience. All right, so without further ado, let's get into the video. All right, so like I said, this is going to be what crypto I invested into and what I learned. All right, this is what we're going to be covering today, what coins I invested into and why. And I'm going to give you my allocation strategy when I decided to reinvest back into crypto. And then I'm going to tell you why I only buy one coin now. And wait till the very end. And then, of course, like in any other video, I give you some very important tips. All right. So if you're new to the channel, new to investing, new to anything, let's remove the gatekeeping. All right. Let's get more people investing. Let's get more people financially educated so that they can have more options in life. All right. All right, disclaimer, I'm not a certified financial planner, advisor of any sort. I'm just some dude on YouTube sharing his own knowledge. All right, so those are probably people you should talk to. All right, disclaimer. Oh, that was the disclaimer, actually. Sorry about that. So these are the coins I invested into and why. All right, so when I first, and this is a quick sidebar story. When I first started investing into cryptocurrency, it started back in like 2017. Again, I wasn't really investing. I didn't really know much about investing. I just started learning, but when I came across cryptocurrency, I kind of stayed away from it. I had some friends who were, $1 million investors. They had a lot of money and they were investing in the markets, and they all said stay away from cryptocurrency. So that's what I did. But in 2018, in the fervor of Bitcoin going crazy, I wanted something a little cheaper, so I invested into Litecoin. Right? I didn't know anything about it. I just saw that it was going green and I should buy. I didn't know anything other than that, right? So I was, putting in hundreds and hundreds of dollars into Litecoin. And then inevitably, unironically, I guess, it all went basically down. I ended up losing I think 60 to 70% of my original investment on Litecoin, right? Didn't stop there. Let Litecoin recover. For the next couple of years, kind of just didn't even touch cryptocurrency. Then a couple years later in 2020, 2021, a lot of friends were talking about VeChain, and a friend put me on with SifChain and Cardano, and what's the other one? And there was one more, it eludes my mind right now. But anyways, I moved basically the rest of whatever Litecoin was into these coins, and I started dropping a lot of money into these other cryptocurrencies. And these were altcoins, these were coins, these were just coins. I didn't know it at the time, but these were horrible, horrible choices, right? But anyways, I put my money into it thinking that it was gonna, 5x, 10x my money, and then of course lost all my money, right? Of course, because that's the way it goes. So when I decided to, back in 2022, when I decided to get back into cryptocurrency, I decided to approach it methodically, right? I wanted to invest in large cap coins, stable coins, right? And what I decided on was Bitcoin and Ethereum. Now I know before you guys get there, like, oh, he's just talking about Bitcoin and Ethereum. There's thousands of videos. Stay with me, all right? Because there's a lot of thought process behind this. All right, so I decided to go with Bitcoin and Ethereum. If these were stocks, these would be the same as like Apple and Microsoft, right? So I decided to go with the largest cap cryptocurrencies, right? So altcoins, memecoins, those are all off the table. And I'm going to show you a video right here on why I decided never, ever again to buy meme coins, altcoins, or coins that my friends were peddling. Why? Because this is what happened to a majority of them. All right. And this is not my video. Of course, we're just going to take a look at it.
Amount of coins that are locked, staked, whatever the fuck's going on, that would be the fully, but obviously the real one is not.
Here it happens right here.
So the market cap is $2.168 trillion, and now the market, it went to zero.
Right, these things, or this type of thing, is not out of the ordinary to happen. It's happened more times than I could count to a lot of my friends, where they buy these really, high risk coins. Basically, the playbook was this. All right. And this is what I learned, right? This was the playbook. I saw it happen so many times to other people This is why I decided to stay away from cryptocurrency. You know, the smaller coins, you know, the Shiba Inus, the Doge coins, the Floki coins, all those other coins. I decided to stay away from them all and only go with stable coins because this was the playbook. You'd have a couple people come together, right? And these are genius marketers, right? They hire some cryptocurrency code writer somewhere else, right? Probably in India. They hire this guy to create this coin, and you know, these marketers, they make a fancy website. Oh, this is going to revolutionize this. This is going to be new for that. This is going to change the world. This is going to do this and the other thing, right? So they're really good at marketing. They're going to say, oh yeah, we have an engineer from Tesla, engineer from Facebook, engineer from Google. You know, this person pioneered crypto for banking and blah, 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 right? All these people are obviously fake, right? None of these people exist, right? But people are eating this up, and it's really good marketing. So this team of scam artists go out and find influencers, YouTubers, Twitch streamers, Instagram pages, whatever, right? They pay them all this money to basically promote these coins to their audiences, right? The influencers, they're promoting this coin like it's going out of style, right? They don't care that their audience is about to get scammed, their subscribers are about to get scammed. They don't care about any of that, or even their fans, right? They already collected their check. They put some of the money into the coin, and you know, the price goes up, and then the people, the insiders, pull their money out and rug pull it, right? Boom, all the money's been taken, and it leaves basically the audience, the subscribers, the fans holding the bag, right? They lost all of their money. Saw it so many times, time and time again. As a matter of fact, quick story, had a lot of friends who invested into SafeMoon. They were saying that this coin was, you know, going to, you know, penalize people who sell, you know, people who hold, you know, are going to be rewarded, that this coin's going to go to the moon, it's the next whatever. I had a friend drop in $15,000, and they ended up losing pretty much their entire investment. And it wasn't just him. It was probably hundreds of others. Definitely within our network, people we work with, coworkers, you know, that kind of thing. A lot of them dumped in thousands of dollars, and they all lost their money. Now me, like at that time, I was nothing but just real estate, REITs, and stocks. That's it. I didn't care about the 100x returns. I didn't care about any of that stuff. I was investing in what I knew. So anyways, again, decided to reinitiate positions in crypto, and this time I wanted to do it right. So that's the story I showed you guys. But I had criteria that I wanted to invest in, right? Stable coins, the largest market cap coins, right? But also coins that had a track record. So Bitcoin, Ethereum, they fit that picture pretty well because they have 7+ years of a track record. I know Bitcoin came around like 2008, 2009, even 2010 timeframe. But you know, as far as being available to the public on a really wide scale, it really started around 2016, right? So that is where I kind of started this, right? So 2016, Bitcoin makes its big debut. A year later, Ethereum makes its big debut. So they have about 7 years of actual track record of being available, of being tracked, of being purchased, right? If there was ever going to be a rug pull for Bitcoin and Ethereum, it probably would have already happened. Can it be rug pulled? I have no idea. But, you know, these were the coins that I decided to go with. So Bitcoin actually has institutional grade investors investing in their currency, right? These are large institutions, specifically large banks. And the banks are, you know, JP Morgan Chase, Morgan Stanley, and Wells Fargo, right? They're not investing in the actual cryptocurrency. Like, they're not buying these digital assets and putting them on a wallet. What they're doing is they're investing into a spot ETF, or, you know, Grayscale's, I think it's GBTC, which is a Bitcoin ETF. So they have positions in Bitcoin through an ETF version, right? So that kind of makes me, as the retail investor, go, if these large banks, these large institutions are buying these cryptocurrencies, then that tells me something, that maybe I should give it a second look, right? Or that maybe I should entertain the idea. So I did. I ended up buying Bitcoin, right? And Ethereum. So this is my allocation strategy. So I'm still skeptical about digital assets, All right. I don't recommend them. I would never tell anyone to go out and buy them. I would never recommend Bitcoin or Ethereum for people, right? Crypto is not SIPC insured. All right. And SIPC is a Security Investor Protection Corporation. Stocks, they are SIPC insured. All right. Basically, what that means is if a brokerage was to go under and it has SIPC insurance, as the investor, you are entitled up to $250,000 or $500,000, depending on the size of your brokerage, right? So if you had $250,000 worth of stock, you're insured for up to $250,000, right? Same thing for up to 500 or even $1 million. Now, some brokerages, they have their own different, insurances. Some will have only up to 250, some will have only up to 500 or even $1 million, right? Every brokerage is a little different. So it's just something to look into. Now, was that a huge thing for me, was to invest only because of SIPC? The answer is no. SIPC is more of a, risk mitigation strategy, right? It's just in case something terrible goes wrong that I know I can get my money out of, like M1 Finance, for example. Now, for crypto, it's not SIPC insured, right? You'll have crypto exchanges, the most famous being FTX, right? That went under. A lot of investors who had Bitcoin and several different currencies on there lost it all. And right now they're still going through litigation, going through, the courts to try and get their money back. And they may get it back or they may lose it all. It's left to be determined. But you also have other exchanges that went under and they were not insured. They can't be insured. You had BlockFi, you had BitConnect. All these went under, and all these other, investors basically got screwed. You had Celsius that ran into a lot of problems too. Investors couldn't get their crypto out, right? So again, I'm very skeptical of digital assets. There's still a lot of talk out there in the crypto world, about crypto being regulated and the SEC getting involved. So all that's pretty much in the air, left to be seen, right? I can't deal with massive volatility or market swings, right? As a prudent investor, as an investor who's trying to build wealth or long-term wealth, I can't deal with volatility. And I'll show you here in a second what I mean. But volatility, for those of you who don't know, is the ups and downs, ebbs and flows, peaks and valleys, right? It's what the markets do every single day. There's buyers and sellers. But this is what I mean. You have Bitcoin right here that has some serious volatility. I mean, look at this, right? That's pretty crazy, right? And then you have Ethereum right here. So both Bitcoin and Ethereum as cryptocurrencies are very volatile. Imagine if you bought here at the top and you just saw your wealth completely evaporate overnight, right? And of course, everything's hindsight 2020. It's like, oh, if they held long enough, held long term, then they would have recovered and this and that. Yeah, sure. But, let's say you had $1 million, you're right next to retirement or something, and you just saw half of it just completely disappear overnight, or even more than half of it, right? What if you saw, almost 70% of your wealth disappear overnight? It would make you really go, like really question your decision making, right? So again, cryptocurrency, very, very, very volatile. Now, we compare that to the stock market. Now, the S&P 500 index is kind of, the king of, the king of the stock market, right? A lot of people say invest in the S&P 500. I'm no different. I always recommend the S&P 500 index. Now, if you look at it from a long-term perspective and you zoom out, the S&P 500 has always recovered. Now, this is through, recessions, crises. You had the pandemic right here. The dot-com bubble crash is somewhere over here. And then you had this bear market over here where, the Feds, they raised the interest rate, and basically the stock market reacted by having a massive sell-off. And look, it's just kind of recovered. I mean, this is not as volatile as Bitcoin or Ethereum or even cryptocurrency in general. Even the NASDAQ 100 ETF QQQ that tracks the NASDAQ 100, that is considered probably on the higher risk side because of the volatility, because technology stocks are just high risk, high reward type of plays. But even QQQ, if you zoom out, it looks pretty good. Like it looks pretty good. You know, yes, they had a huge sell off when, you know, the Feds began raising their interest rates. You know, you had the pandemic right here. But look, it's recovered. And even compared to like Bitcoin, I don't think, you know, the volatility is as bad, right? So that's just, again, I'm just thinking out loud. This is what I'm thinking about when I decided to reopen my position in Bitcoin and Ethereum. I wanted to, or cryptocurrency. I wanted to invest in like the mega caps, right? The large cap cryptocurrencies. So when I decided to go with Bitcoin and Ethereum, I decided to go with a 60-40 split between the two, right? With a 5% allocation to my total portfolio. So what that means is if I had $100,000 in my portfolio across all of my, you know, accounts, then I'm only going to have $5,000 worth of crypto at any point, right? And that's what I did. I went with 5%. Now, if you're, you know, probably on the higher risk, you know, type of person, maybe you're younger and you can weather the storm. I mean, you can increase the allocation if you want. You can go to 7%, 10%, 15%. You can go as high as you want. I don't care. But, you know, I decided to go with 5% because I wanted to, you know, I wanted to partake in the run up, in the bull run that crypto was having. And I wanted to be able to say that I own some crypto. You know, because they're, you know, there is a FOMO out there, a fear of missing out. That is real. And when you're reading nothing but how crypto is making all these people millionaires and Bitcoin's going up, you kind of want to jump into. And I have some friends who made, you know, $500,000 off Bitcoin investments. So I wanted to get in on that action. So I just wanted to initiate just a small position and just see where it goes. So I went with 5%, 60-40 split between Bitcoin and Ethereum. And this is basically, if you use M1 Finance, this is basically what it looked like, right? I had a 60-40 split. All right, there's nothing special about that. Of course, if you're investing on Robinhood or investing in any other brokerage, you know, it'll look a little different. But this is basically what I went with. So after all of that, I decided to only buy this one coin. All right. So I sold my Bitcoin and Ethereum at a large gain and invested the proceeds into real estate. All right, so I make no qualms about it. I try not to hide the fact that I'm a huge real estate guy. I love investing in real estate, right? It is the one asset class that I believe in the most in. It's the one asset class that I know the most of, right? So I decided to basically sell Bitcoin and Ethereum while it was still, you know, at their all-time highs, I guess, and take the proceeds and invest into a real estate deal that came across my desk. It was one of those deals where it's like, man, I'm scrounging. I'm looking under the pillows for money. I'm looking at which, you know, things I could pillage. What can I sell, right? And I came across my cryptocurrency, and I knew that my cryptocurrency holdings were not my end all be all. That I was going to just invest into it and then sell it eventually. I had an exit plan, and I ended up selling it at like a 230% gain, which is pretty nice. So this was my sell order back in July 4th. I ended up selling all my Ethereum and all my Bitcoin, right? And I sold it for 30. It was at $35,000, but it started trending downward. And I said, as soon as it gets to $35,000 or $30,000, I'm gonna cut it. I'm going to sell out of it because I needed the money, right? I needed the money to move it into real estate. So that's pretty much what I did. And there's a stunning discovery, which you may not know. Most coins, probably more coins than you could think of, are actually tied to Bitcoin's price, right? Whenever Bitcoin rises, the other coins rise, right? Whenever Bitcoin falls, the other coins fall. There isn't much in terms of diversification. So that 60-40 split that I had earlier really didn't do much for me. If we look at it, if we look at Bitcoin and Ethereum, they're almost trading identically, which is kind of crazy. Like as Bitcoin went up, you know, Ethereum went up, or right here, as Bitcoin went up, Ethereum went up. And as Bitcoin went down, Ethereum went down. And as Bitcoin went up, Ethereum went up, right? So I, you can go on like, I think they call it CoinGecko, and you can see all the charts. Whenever there's huge sell-offs in Bitcoin, there's always huge sell-offs in every other coin. So, I mean, I could be wrong about that. If there's cryptocurrency enthusiasts, investors out there, please correct me. But based on what I've seen, it seems like a lot of coins are just tied to Bitcoin price movement. So there's really not much diversification there. So, after coming to that realization, I pretty much decided just to go all in on Bitcoin. I want to rebuild my position in Bitcoin. So I'm going to be building a position in Bitcoin over time. And this is pretty much what my portfolio looks like now on M1 Finance, right? I only have $1,000 in there, right? I sold pretty much everything, and then I started buying a little bit into it. Now, since I've invested in a lot of real estate and, a lot of stocks that pay dividends, if I get distribution checks, from the real estate syndications, if I get rental checks from my rental properties or even dividends, I may move some of that money into Bitcoin, right? Because I think the gain on that could be substantial rather than it just sitting in a bank account, right? Or sitting or getting it reinvested into the REITs that I'm invested into or stocks, right? Again, I'm still toying with the idea. I may continue to do that. I don't know yet, but it is up there. So real quick, shout out to my new members on the Skool community. Sylvita, Kenneth, Jimmy, Larry, Michael, James, Alex, and Trevor. Appreciate you guys joining the community. If you guys would like to join the discussion, learn how to invest, a place where you can ask questions, get some replies, talk to me directly, please join. You guys can also comment down below, and I reply to every comment. All right. I also plan to have webinars and Zoom calls in the future once we reach about 50 members. All right. And it's all free to join. All right. I don't need your credit card. I don't need any of that. It's all free to join. I'll put a link down below in the description. All right. So finally, some important tips before we get off this video. Be careful of pump and dump schemes. I always say this, and this is my motto. If you're hearing about it on Instagram, X or Twitter or Facebook or YouTube or even The Office, at that point, it's already too late. At that point, it's already too late. The insiders, they are the ones that are going to rug pull it, and they're going to make a lot of money, right? This has been the trend that I've seen the most happen, right? When everyone in the office is talking about it, talking about SafeMoon, talking about VeChain, talking about this coin and that coin and Floki coin and Dogecoin and all these other coins. When everyone's already talking about it, it's already too late, right? More times than not, they have all lost their money. Invest in what you are willing to lose, right? This is why I went with a 5% allocation to cryptocurrencies, because I can weather that storm. If I had a $100,000 portfolio and I lost $5,000, cool, no big beans there. I'm not gonna have a tantrum. It happens. It was a high risk play for a high reward. Didn't pan out that way. Oh, well, so what, right? So as a prudent investor, that is the way I think. Now, if you're someone who likes to take higher risk for a higher reward, you can absolutely go up in that. There's some investors who are 100% cryptocurrency. I don't know how they do it, but they do it and it works for them. So I can't say anything about that. But just a tip. If you're going to invest in cryptocurrencies, whether Bitcoin, Ethereum, or any other coin, go with a small allocation to your total portfolio. It's just a recommendation. You can go higher if you want, but just think the worst case scenario. What is the risk? And when we talk about risk, we talk about loss of capital. If you lost the entire thing, would you be okay with that? All right. So that's just something I want you guys to always keep in the back of your mind. And then finally, digital assets are very volatile. If you can't ride the wave, don't invest. All right, so with that is that for this video. I hope you guys found it educational. I'll see you guys in the next video. Peace.